This is problem 4.07 from the end of chapter 4 of the CFA Institute textbook, Corporate Finance, A Practical Approach. And here you're given a bunch of information, and based on that information you're expected to calculate break-even points for Gearing and Hebelcraft, these two firms. Alright, so we have the number of units produced and sold, that would be Q. The sales price per unit, that would be P. The variable cost per unit, V. Fixed operating cost, F, and fixed financing costs, INT. Alright, so if we're calculating the net income break even, alright, the net income break even is calculated as the point where you make exactly zero net income. Alright, so if I took PQ, which is revenue, and then subtract VQ, which is basically the cost of goods sold with a variable cost. Alright, PQ is the price per unit times the number of units sold, so that's sales. VQ, variable cost per unit times the number of units, is basically the cost of goods sold. Subtract the fixed operating costs, that's the selling, general, and admin, and all the other ash and trash operating expenses. And then subtract the interest expense. The point where that is exactly equal to zero would be my net income break-even level. Okay, so trying to figure out how many units I got to sell, because the question's asking me how many units that we need to produce. So I can rearrange terms here to solve for Q. The Q times P minus V minus F minus interest equals 0. Okay, so if I gather some more terms, then Q times P minus V, if I add fixed cost and the interest expense to both sides of this equation, then it drops off to the left of the equal sign. So simple algebra gives me the number of units times the contribution margin has to be equal, it has to produce enough money to pay the fixed and interest expenses. Alright, so Q would then be equal to the fixed plus the interest expense divided by the contribution margin, the price per unit minus the variable cost per unit. Okay, so my break even for these would be equal to my fixed operating cost plus my fixed financing cost divided by the difference between the price per unit and the variable cost per unit. And if I subtract the variable cost per unit from the sales price per unit, that contribution margin, which would be P minus V, is the amount I earn per unit that can go to pay all the other fixed costs. So all we're doing is seeing how many units it would take to accomplish that. And this is not a dollar number, it actually comes out in units. So that's how many units I would actually have to produce to break even. And it's 750,000 for Gearing, and Hebelcraft it is 1.1 million. And you could check that by running it through an income statement. All you have to do is produce the income statement. PQ, that'd be revenue, or sales, variable op cost. Subtract that, you get gross profit. Subtract the fixed op cost, and you would have operating income. Subtract the interest expense, and you would have the taxable income. And you want the point of the break-even is taxable income is 0, so whatever your tax rate is, let's just say it's 40%. 40% of 0 will still give you a net income that's equal to the taxable income if that's 0. Alright, so sales would be 750,000 units times $200 per unit. The variable operating cost, 750,000 units times $120 per unit. Just format all this up to make it nice. So the gross profit would be revenue minus variable cost. The fixed operating costs are 40,000, and I subtract that from the contribution or the gross margin, and that'll give me operating income. The interest expense, 20 million, and I subtract that. Taxable income 0, and 40% of 0, I'm just assuming a 40% tax rate because that's generally pretty close for a large company. So net income is exactly equal to 0. At anything over 7,750,001 units, notice you're actually making a profit. Anything under 750,000 units, 749,999, you're actually generating a loss. So break even is a point where you exactly have enough money to break even. And if we did this same calculation over here for our friends at the Hebel King, again, you can check your answer, but at 1.1 million units, you exactly break even. So the answer is A, at 0.75 million and 1.1 million units respectively.